What about the U.S. dollar, which has really surprised people with its strength this year? I think yourself included.
Me too.
To many people, they think, well, the success of even a market like Japan is just the flip side of its weak currency.
That's correct. And I think it creates an opportunity, which is the dollar went straight up for a decade, right? And non-U.S. investments were bad versus the U.S. And then really starting in the summer of 2022, the dollar started to decline until, a month ago.
Right.
And then we've had this big rally. So is it a beginning of a new secular bull market for the dollar, which is give up on everything else, stick to the S&P, or is it just a counter-turn rally? And I would argue this creates an opportunity for some of these global stocks that are outside the U.S.
If it weakens again, and the irony is you think it could weaken because of the fiscal situation, right? So it's sort of like the dollar weakens for bad reasons, but it still benefits corporate America, which just seems sort of paradoxical.
Exactly. What I don't hear many people talking about is we have approved the Infrastructure Act, we've approved the CHIPS Act, and we've approved the Inflation Reduction Act. How much of that money has actually been spent yet?
Exactly.
It's all coming.
Yes.
It's all coming.
No, and it's very supportive right now. That's one of the main reasons, I think, for the economy's strength. Yeah. All right, so some of the world's biggest luxury stocks have been taking a beating over the last couple of months on these fears about what's going on in China. But let's get some details from Robert Frank. Robert, where do we stand?
Well, Kelly, you and Andrew were just talking about the key point, which is where's the Chinese consumer in all this? Luxury stocks saying not in a very good place. Those stocks losing over $150 billion in market cap just over the past 6 months, dragging down a lot of those European stock indexes. LVMH alone has lost over $100 billion in value since its peak last April. That is no longer Europe's most valuable company. That title now held by Novo Nordisk, of course, the maker of weight loss drugs. You look at Kering, which owns Gucci, down over 20%, along with Richemont, Hermes, and Moncler. The main reason is China. They account for about 20% of global luxury sales. China's slowing economy, the property crisis, youth unemployment, falling consumer demand, all that expected to hit the affluent and aspirational consumers. HSBC saying in a research note that, quote, sales in mainland China are bound to decelerate quite visibly. Now, luxury companies had hoped that the wealthy Chinese would be immune to all this, but many of them are actually leaving the country. A new study projects that over 13,500 millionaires will emigrate from China just this year. That's up over 25% from last year. Where are they all going? Well, most going to Singapore, Canada, and the U.S. Kelly, we should be clear that we haven't heard from the companies themselves over the past month about China. In the second quarter, they all had strong China results. So this is just investors projecting on the economic data that we've seen that luxury sales will also be hurt, but we haven't heard that from the companies yet.
That's a great point. So, Andrew, I turn to you for the kind of but in the face of a lot of this doom and gloom about that sector.
Well, there was a piece you ran earlier today saying that the average membership of a Singapore golf club has gone, or the dues has gone from 200 to 600,000 because of the Chinese have moved to Singapore. So maybe they don't buy their Louis Vuitton bags in China, but they're buying them in Singapore. What Robert Frank said, which is actually right, the companies have actually not said the business is weak in China. What they did say is that they see a slowing in the U.S. Right. And so that's where the weakness is. But I think a lot of this has to do with the fact that dollar has appreciated recently. So these investments in dollars have really been
attractive.
Exactly.
But you're still pretty bullish on a couple of luxury names here. Which ones in particular?
Well, I look at Louis Vuitton. This multiple's gone from kind of high 20s down to 20 times.
Wow.
And I would argue, and you know this, Kelly, the death of the luxury consumer is greatly exaggerated. And I think Ferrari is a very intriguing. Can you imagine if your business...
That's been one of the great performers, by the way.
If I said to you, it doesn't matter what you charge your clients, they'll buy.
What did they always say? Was it them or Porsche who said we always make one fewer car than our customers want, just to maintain that status?
The price inelasticity is... I've never seen a company like this.
Are you, and then I want to quickly turn back to Robert, but are you bullish on these names, even if their core U.S. market, and we've been talking about this story for a year now, if the luxury market in the U.S. is slowing?
I think that's a bigger concern than China, but I don't think that is a reason to I've turned more bullish on these stocks because they're down.
Right.
Louis Vuitton's down 25%. This is a big correction. It's a big multiple change.
Well, and 3 months ago, we were writing celebratory stories about how it was the greatest company ever created, and he had, the greatest executive in the world, and, and all of a sudden.
The game is, the way you make money is to buy good companies when they're down, not when they're at 52-week highs.
Exactly. Robert, what would you add to that, especially what's happening in the U.S. front and the luxury space?
No, Andrew's absolutely right. The big concern in the second quarter was the slowdown in the U.S. At least Asia had made up for that deficit. The question now is, does that last leg of the stool, Europe's weak, America's now weak, does the last leg, which was Asia, start to fall apart? I'd also echo his point about Ferrari. I interviewed the CEO of Ferrari 3 weeks ago, and Benedetto Vigna told me that demand in China has never been stronger. They've got a new SUV that they're launching. That's a very great product in Europe. So, Ferrari's doing well in China. We just don't know, like much of China, what's happening with the Chinese consumer until we get those third quarter results.
All right. All the more reason to look forward to it. Thank you both. Really appreciate it. Robert, Frank today. And Andrew, thanks for all your time. Andrew Slimmon joining me from Morgan Stanley.